background, and how did you get to Bank of the Future and become the Bitcoin guru?
Yeah, sure. Actually, a story you won't know, Robert, is that I was working in investment banking, and I was going from market making to trading to corporate finance. And somebody handed me a book in 2006 called Rich Dad Poor Dad. It really related to the rat race. And right after reading that book, I decided to quit my job and return to my passion. Of economics. I decided that the business that I wanted to create, as well as being an investor, but I didn't have any money to invest. In fact, even though I had a well-paid job, I was about £100,000 in debt, and deep in the rat race and consuming rather than investing. So in 2006, I decided to throw in the corporate towel. And I started the business I tried to create was actually a non-fractional reserve bank, because I was really studying the fraud of money, and how it's actually created. And so that led to me to writing the book, Bank to the Future, Protect Your Future Before Governments Go Bust. And that led me to actually speaking at the very first Bitcoin conference in the world. When I spoke there, I realized that the Bitcoin community was actually creating that infrastructure. So I bought my first Bitcoin at $3, and we started investing in all the companies. And so the Bitcoin did well. So I was looking at the cash flow quadrant, reinvesting some of my assets. We started investing in companies like Coinbase and Kraken and Bitstamp and Bitfinex. And many of those, about 10 of those, have gone on to become the exchanges that built our industry. So we built banktothefuture.com to allow other people to co-invest in the stocks and shares of early stage Bitcoin companies. And the rest is history. So you've got a part to play in the story that you may not know about.
So Simon, going forward here, we're in a crazy, crazy time, and I don't know where this is heading. What is your take on the banks with Bitcoin, or what do you see happening coming down the road?
Yeah, so there's two types of banks at the moment. There's banks which have sold off all of their toxic assets to your pension. And the 401k is holding all of those toxic assets, or the Federal Reserve is holding all those toxic assets. And then there's banks which...
Simon, I essentially plug my book, because Who Stole My Pension? Because you're saying exactly what I'm really concerned about. The old guys like me, they're going to find out there's nothing there. It's just toxic acid sitting in there.
Yeah, absolutely. And the second type of bank is one that has excessive risk I believe that the way that everything's moving right now is we've entered this two-tiered economy where you have a new superpower, China, which was built off a quasi-communist stroke capitalist experiment. And then you have America, which seems to be, if you look at the two, you've got America, which is looking more and more like China every day, and China that's looking more and more like America every day. And eventually you converge in this socialist ideal. And so when you look at politics right now, the IMF called out for Bretton Woods 2. I know Kiyosaki, you always talk about, Robert, 1971, the rules of money changed, and that's exactly right. But in 1944 was the precursor to 1971, where this debt-based, backed by gold, but fractions of gold really started to be. Now, I think we're entering into a new monetary phase. So for governments all around the world to pay for all of these obligations that they've made, that they seriously cannot meet, we have to move to a completely new monetary renegotiation. And so a Bretton Woods 2 style moment. And I think that moment is going to be central bank digital currencies, where they're going to be issuing money based upon allowing banks to go bust. So insolvent banks, rather than bailing them out and rather than bailing them in, they're going to let them go bust. And it means that any money that you held at a bank, you can download an app in the future, and you'll have this new central bank digital currency. Now, the problem is with that money is it's a deleveraging of the economy, but that money is going to be surveillance. It's going to be removal of all your privacy, removal of all your freedoms. When you take that money, the helicopter money that's going to be issued and used to allow banks to go bust, we're taking out these intermediaries and banks, and technology companies are all going to be built on top of these central bank digital currency. And then you have Bitcoin, which is the exact opposite. So the money that you hold at a bank, you don't own it, but the bank is the legal owner. You can't spend it because of the surveillance and anti-money laundering laws and all sorts that make innocent people not be able to spend their money. And it's being printed out of existence. Then you have Bitcoin on the other side. You can own your money, you can spend your money, and the money supply is completely fixed. So that's why it's a frenzy of companies right now trying to protect their balance sheets from the dollar and putting a percentage of it into Bitcoin, because the writing's on the wall in terms of these trends. And I think we're in one of the largest wealth divides that we've ever seen, with this, incredible wealth inequality that's causing people to really push for socialist ideals, because everybody's deep in debt and the inequality has got crazy. And they're going to push for that central bank digital currency, which is going to be signing away your freedoms, your personal liberties, and privacy.
So we have a lot of questions I want to ask you about that. But the question right now is that the price of Bitcoin went to like over 40. I think today is trading around 35 or something. What causes that fluctuation? That's the question I have.
Yeah, so gold is what I call a store of value. And by store of value, it means it's not designed to increase your wealth. It's designed to preserve your wealth. For 5,000 years, it's preserved people's wealth. And so the wealthy and the central banks use gold as a store of value. Whereas Bitcoin is a 10-year experiment. It's a speculative store of value. And that means that it has many of the properties of gold, but it's digital so that it can be used, the utility is greater in certain extremes. But it's speculative because, it's not got 5,000 years of history. So that means that the majority of the world, I've seen my $30 Bitcoin crash to $3 in a day. I've seen my $1,250 Bitcoin crash to $250 in a couple of weeks. I've seen my $20,000 Bitcoin crash to $250 in less than a month. The reason is because people are speculating on whether Bitcoin can become a store of value. And so that means that some people, the vast majority of the world, still think that Bitcoin is a Ponzi scheme, a scam, a currency just for drug dealers, or it's a get-rich-quick scheme. But each year, more and more people realize that the value of gold, of Bitcoin, is owning your own money, spending your own money, and having a fixed supply. So over the years, all these new cases come along where people actually discover. The latest case is really actually the people on a mass scale understanding about money printing and why people are asking questions on a simple level. Why am I paying tax if you can create trillions of dollars overnight? In order to, these questions people are asking, and it leads them to things like Bitcoin, because we're in the information age and information is readily accessible. So this speculation means that until the day comes where everybody knows that Bitcoin's not a scam, a Ponzi scheme, a currency just for drug dealers, and a get-rich-quick scheme, it might act more like gold, but digital gold, and therefore will be more of a wealth preserver than a wealth creator. So you have to have a thick skin and be willing to go through the ups and downs as the emotions of fear and greed cut in, as people get scared of, is it going to fail? Is it going to succeed?
Yes. So Simon, we were talking at the break, and Robert, you were talking about the difference between trading and investing Bitcoin. Can you elaborate a little bit on that, Simon?
Yeah, absolutely. So I've seen a lot over the years, having been from the beginning. I've seen people that were involved in the highest performing asset class in history that still didn't accumulate wealth. There's a couple of reasons for that. One, they spent their Bitcoin because they needed to meet their living expenses, and they weren't spending their fiat money, they were spending their Bitcoin. And so treating it as a medium of exchange and unit of account rather than a store of value. But the second is because they over traded it. And every time you trade, you create a taxable event, and you also create the opportunity to be wrecked by insiders. So Bitcoin, as every
What do you mean by wrecked?
Sorry, wrecked is a crypto phrase where you lose all your money. Sorry, there's so much jargon in our industry. You know, hodls and FOMOs and wrecks and all these funny phrases you see on Twitter.
Nothing changes, right?
Yeah. But yeah, so overtrading is a real killer. And I've seen so many people that have tried to invest in the next Bitcoin killer and end up with no Bitcoin. And it's a very big mistake. And especially when new people join, they come along and they say, well, Bitcoin's $35,000. I could buy something else that's like a couple of cents and try and replicate the story. And while there may be a time and a place to do that, but you don't want to get caught with no Bitcoin. So the difference between investing and trading is an investor really looks forward to the bull markets and the bear markets. So for me, I really like it when Bitcoin corrects because it allows me to accumulate more Bitcoin at a lower rate. I'm not going to be selling that Bitcoin. And if it crashes like crazy, I don't really care because I've got a long-term perspective on it. And I don't want, you know, and the Bitcoin is a very manipulated market, just like every other market short term. You know, you've got people with vast wealth, the hedge funds, the exchanges, that push the price up and down like crazy. And they're just trying to scare you out of your Bitcoin. They're long-term holders of Bitcoin, and they're trying to get your Bitcoin. And if you're a trader, you can be, you know, 90%. I worked in the traditional markets. I was a market maker, and 90% of traders lose money to the 10% of insiders. The same is true in Bitcoin, traditional markets, gold markets, everything. So short term, you are trying to beat these people, and they know more than you. They've got access to better resources. So the great equalizer is becoming an investor. You know, traders, it's a losing game. You're creating taxable events and you're trying to beat the insiders. Now, you might be great at that, but most people aren't.